Monday, December 30th, quick one-up video for you wonderful ladies and gentlemen. We're running out of runway till the end of the year. Obviously, it's New Year's Eve tomorrow night. I'm filming this after midnight, so it's technically tonight. I think the markets are just not seeing a lot of bids. It seems to me like a bit of a buyer strike and some lock-in ahead of the new year. I also think that there could be some worry about the Trump tax cuts being extended because there's such a narrow majority in the House and Senate, and my thinking is maybe they're worried because the Republicans in the Trump administration are prioritizing the border and talking about doing the tax cuts in a second bill. That makes a little bit of sense to me. I think that could be a little bit contentious, and maybe people are walking away from that. But I think the more than likely issue is that the 10-year yield has gone up almost a full point since the Fed started cutting rates. Yeah, let that one sink in. As far as VIX goes, it's not really very convincing in terms of the pullback. Yeah, I mean, we've had a couple of days of increased volatility. My guess is there's just a little bit of hedging going on and maybe some people putting on some cheap short bets, which I guess makes sense. I think, though, that volatility will need to clear and sustain above 19.36, and then, of course, the range high, which is 23.08 to 23.76. We have traded above that in that big volatility spike on 12/18, but it wasn't very long lasting, and we were able to come back down. So not long lasting, but fast acting. With regard to futures, I told you that I thought anything back below 60, 50, 75 was a little bit iffy. Now I would say the bulls need to get up over 6,005. 6,000 to 6,005. Anything below there to me still risks sideways to lower. Technically, we did have a little bit of a look above and fail, so it wouldn't even surprise me to see if we check back to 58.66. I would love to see a check back with a look below and fail there, or maybe we make a higher low here. Generally, I like to be long things when they're above the 200 MA and 100 MA for that matter, 30-minute time frame. Anything below there to me is a little bit more iffy with chop and potential liquidation breaks. The Qs are same. They needed to stay over 21,812. They clearly did not. I also need to see it over the 100 and 200 MA 30 minutes. I do think that the bears probably have a stop above today's high of day. So if you want to do that, I think that that makes sense. 59.93 quarter. And in the Qs, 21,571 quarter. Very simple. Anything below there, sideways to lower. Above probably generates a short squeeze. As far as SPY goes, potential head and shoulders here. We're teetering on this neckline here between 584.03 to 586.12, which of course was a breakout zone. And I think that the bulls could get things going if they can get up over and stay back up over the 50 MA, 592.79. That to me would probably see another test of the 600-ish area where the 20 MA is. Anything that remains below that 592.79 does risk a move down to fill the 11.5 gap fill to 576.70, and that's roughly the 100 MA at 577.29. If we do the full Monty all the way down to the green channel low, if we were to do it tomorrow, we probably wouldn't. It'd be the 716 reference highs that we saw at 565.16. So if you want to use that as some kind of a mid or lower strike on a put spread or ratio, I'm good with doing something like that. I have told you before I have on some put ratios. I had actually rolled out some of the Januaries into Februaries. I'm long the 590, short the 575, short the 545. In the January, the lower strike was the 550. I turned $1 into $2.50, and now I just re-up the dollars. I see that as a good risk-reward type of a situation. As far as Qs go, a little iffy. We are technically a little bit below the channel, but we're right on that 11.11 breakout at 515.58, and we are still technically above the 50 MA at 510.13. If that were to fail, we probably come back to the 501s, 500-ish area. Maybe we fill in the 11.5 gap to 492.21. I would feel better over today's high of day if we got over 519.36. Probably mosey on back up to the 524.39 10 MA. NVDA was strong today, kind of led the charge on the bounce back. I see that as very simple. It needs to get up over and stay up over the 50 MA, currently 139.96, and then it's got its work cut out for it because there's the 140.76 to 144.42 potential resistance zone. But NVIDIA does look all right. I mean, it is technically above the downtrend, and it just seems like it's a bit of a time correction here as opposed to a real big price correction. Apple got the 260 and pulling back, no surprise. We saw that after the 250. The top side of the green channel would be 246s, which has been a very key pivotal level that I've been discussing. It's really between 245.46 and just 246. If that area holds, it's still fine Below there to me does risk a check back to the 237s. I'd feel better back up over the 10 MA here, or we could just use high of day at 253.50. It's still over the 20 MA and Apple still looks all right. It just has a couple of days of pullback. Yeah, it does technically have a bit of a secure high, but maybe it does catch some legs going into the new year with allocation money. That's going to be the key. I think if people are going to allocate in January or if they're just going to take off profits. Januaries tend to be bullish months, and I do like the idea that the TV people are not so keen on it. Tesla has been acting okay. It's been pulling back. It's right on the 20 MA here at 416.57. I had said if we couldn't clear, and once we stalled at the 484.90, 2.618, we were likely to come back to the 2 times range at 403.20, and the trend line is roughly around there as well, around 398s, 399s, depending how long it takes to get there. It could even just be 400. Just a little bit of a rollback there. Google also okay, but really does need to catch its legs here over the 191.75. If not, it could come back down to the 182.22 area. Netflix has been super strong. It's around the 900-ish area here. We stalled at the 2.618 at 926.90, so technically it could pull back to the 2 times range at 868.12. The 50 MA is just below there, and that could offer up some support at 850.58. The Bitcoin has been what's kind of ruling the roost. I've noticed that when the rally started, it followed Bitcoin, and now that Bitcoin is pulling back, the market seems to be pulling back. Very simple. I was saying that bulls really do need to get over those 10 and 20 MAs. I'm going to be a strict grader and say the 20 MA at 98,753, and if you want to be a really strict grader, it's got to clear the 100K. On the pullback levels, we have 90,785, the 50 MA at 88,788, and what would really interest me is a test of the primary trend line and the triangle fill at 85,890. I think that the bulls either have to get over the 20 MA or we wait for it to check back to that 85,890-ish area. MicroStrategies blew its brains out. It got the 2.618 at 535.65. It is right on primary trend here. I have an alert over the high of day at 320.02. If that clears, I think there could be a move up to the 20 MA at 369.78. If we do keep pulling back, the breakout level of the 267.89 lines up very well with the 11.8 gap fill at 270.42. Anchor VWAP is down at 112.67, so if you want to do some kind of longer dated play targeting that, I mean, I don't know that that's going to make sense, but if you want, you could do some kind of ratio. For me, the real buy the dip spot will be the 200 MA. We saw that as a key hold on 8.5 and then again on 9.6. So 200 MA tends to be the buy the dip. It's currently 194.34 and rising. So I actually prefer buying, let's say, 270s, selling 195s, maybe 1 by 2. If you can get it on for a net credit, maybe even go out a little bit deeper, but generally that area I think is okay. Generally speaking, I think we're just in holiday shortened week mode. We're going to have the Wednesday close for New Year's Day and then the January 9th. Keep that in mind if you're in terms of weekly options because that theta decay picks up very quickly. I think that the bulls need to get over today's bounce highs in the futures and in major market ETFs like SPY and Qs. There's not a ton of damage done just yet, but often risk starts slowly and then all at once. I do think the VIX is still pretty low here if you want to go out to, let's say, February, March and put on some put spreads or ratios. Smaller size if you do the ratios, because if the market starts coming down harder and faster and you see a pump up, let's say, to 30 in the VIX, those overwrites will come under a lot of pressure. And you'll have to have the huevos rancheros at support to cover the 1 by 1 and be naked the extra overwrite. I do that all the time. It sometimes is a little bit gut-wrenching, but we pick the levels and we have the discipline. There's ways of managing it if it gets into trouble by rolling it out or making it into a spread, selling upside calls or call spreads, because when we see rallies, a compression in volatility often crushes the calls also. I see a lot of people, by the way, trying to buy calls after big dumps, and then they are wondering why they're not making so much money. When that happens, spreads are actually better because the volatility component is largely taken out, and then you can get the price discovery. Have a great new year. We're going to crush it on the flip side. Like and follow for more.